What's going on, guys? It's GBP baby. Welcome to another video. In this video I'm going to be going through 100 examples of relative equal highs, relative equal lows, significant swing highs and significant swing lows. Now the reason I'm doing this is because my previous two videos in this series were quite laggy, so I can understand why it may have been difficult for a lot of people to understand. So in this I'm literally just going to go over what I showed in those videos, but I'm just going to give you examples of what you should be looking for in the charts. So we're going to start with relative equal lows. I'm going to go through 25 examples of these, and then we'll go into relative equal highs. Now we're going to be going through a few different time frames, just so I can show that it's not, what's the word? It's not exclusive to say one time frame or one pair or whatever. So here are relative equal lows. What makes these relative equal lows? We've got a swing low here, we've got another relative swing low here, then we also have relative equal lows over here, and you'll see that some examples haven't been traded to yet, like this, and it doesn't necessarily mean that price is going to trade to them, or trade to them for now, but just being able to identify them is what we're here to do. So here we've got relative equal lows, 1, 2, relatively equally low. You can see our price comes down, grabs those and then moves higher, and that's literally all we're going to be doing. And the more you train your eye to be able to identify these relative equal lows, the better you're going to be able to look for them in the chart. So when you open the charts, you'll know what you're looking for, because I remember, although I've been learning for a long time, there was a point where I had no clue what to look for or what to expect. And once ICT was explaining how liquidity resides below relative equal lows and relative equal highs, I started to know what to be looking for, continued back testing those, and if you look at my back testing videos now, I do the same thing. And it's just training your eyes. It's literally just training your eyes to be looking for certain things. Here, this low and this low, relatively equal. You can see our price comes down into that. Now there isn't a perfect way of doing these, because you can see obviously not every price is going to be as clean, say, as this price range here. Like, it's not always going to be 100% clean, and that's what you need to understand. You shouldn't be so harsh or hard on yourself into thinking it should be like that, because it will never be clean. But are they relatively equally low? 1, 2, 3. Yes, they are. So we can use that as relative equal lows. Here, relative equal lows. And they are very easy to spot. Like once you put the back testing work, once you put the work in and you start back testing, you'll be able to identify them pretty quickly, even here. So this low, these lows are all creating this idea of support at this level, and then look what happens, price attacks it. We have some nice relative equal lows resting below here as well. This low and this low, relative equal lows. Ooh. Excuse me. Here, relative equal lows, and then I am also going to change time frames just so we can have some more examples, but it's all pretty much the same. So here, low, low, these two lows create relative equal lows. This is all from last week. As you can see, we had a pretty big week. Oh, relative equal lows. And this is basically just back testing, to be honest. This is back testing, but it's with relative equal lows. And this is what you need to be doing in your charts, so that you can train your eyes to know what to look for and what to anticipate. Look at these. When I see a nice clean set of lows like this, I always anticipate price to want to come and grab those stops at a later point. As you can see, that happens here. But it's relative equal lows like this which are nice to the eye and nice to use as a target. Let's go to the 4 hour and see if we can find any. So can we see any along here? I can. Here, 1, 2, 3. Relatively equally low. And if this is, say this isn't relatively equal enough for you, you could always just look at these here, 1, 2, 3. That's probably the better of the two to look at. So let's just keep that one. for the sake of example. But remember, there's not a right or wrong way of doing such a thing. That's another thing about trading that people don't explain. Like, it's very subject to your understanding and the way your brain works or wants to look at it, you know? There's no way I can give you my way of looking at it. And ICT said something similar, and now I'm starting to understand what he means. Here, relative equal lows, 1, 2, 3, you know, and then price. Once for it. Relative equal lows here. These beautiful relative equal lows, 1, 2, 3. I think these are the lows I used in my example. I have another video coming explaining what liquidity actually is, so you'll learn a lot more about why I'm bringing these relative equal lows up. But in my next video, I'll be explaining that in much more detail. Over here, relative equal lows, 1, 2, and even these two, 1, 2. So we've got two sets of relative equal lows. Yeah, I see some more. Yeah, 1, 2. Let's go to the 1 minute, see if we can see any. 1 minute's definitely going to have some, obviously. But price is fractal, so it really doesn't matter what time frame. The concept still exists because, yeah, price is fractal. So all below here, let me just shrink this. All below here. These lows, 1, 2, 3, 4, all of these, you know, wicks are creating relative equal lows. It's not as clean as what we've seen, but regardless, price is still coming down and targeting them. Maybe that's more of a significant swing low, but we'll talk about that when we get to that stage of the video. Here. These lows, all these wicks along here, relative equal lows. Excuse me. Below here as well. These two, 1, 2. Clearly here, they're all the same level. I just saw some, I don't know where I put that. Oh, here, these two. Looks like there's some over here as well. And finally, this should be the 25th one over here, these two. So those are relative equal lows. I believe we have 25. Let's now look at some examples of relative equal highs. For the relative equal highs, I'm going to be looking at Euro USD, just to show that, again, it's not subject to any particular pair. Let's start on the 4 hour, because why not? And yeah, what we're doing is we're looking for exactly the same thing, just inverted basically. So where can we see relatively equal highs that price will likely want to target? Well, I see some here, so we can draw that out. Buy side liquidity this time, because there's buy stops residing above there. Even here, this swing high coupled with this swing high and this swing high, it all creates, this is relatively equal highs. These are relatively equal, and you can see how price targets it. Where else can we see relatively equal highs? And I can't stress this enough, guys, there is no right or wrong way of doing this. So although it might look like, oh, he's pointing at specific things, it's just what I'm seeing with my eyes, and you'll see different relative equal highs and lows to me. But so long as you understand the concept, and when you do watch the next episode and it explains to you what liquidity is, you'll understand why I'm bringing your attention to these levels, and why ICT brought my attention to them levels when I was learning from him. Here, relative equal highs again. Here, these, here, here, 1, 2, 3. Here. Here. All of this, you see, all these troughs. And one thing ICT always says is that smooth edge in the charts, smooth edges like to be made jagged. So here we have these nice smooth relative equal highs all along here, and then it gets made jagged here. We have some nice relative equal highs up here. Even these three, you see, they can span in terms of range as well. Like we could have highs further stretched out depending on the time frames and things like here, or we can have the little small ones like this. It's the same concept at the end of the day, because price is and always will be fractal. So let's drop down to the 5 minutes, see what we can find as well. Here are some relative equal highs. Here. Beautiful. Here. And one thing to take note of is that it doesn't always have to be the most highest high. Like it doesn't have to be the it doesn't have to be the absolute high. It can always be the this high, this swing high, if it's closer to this high. Does that make sense? Again, there's no right or wrong way. There's even relative equal highs here. These are probably more cleaner in my eyes when it's like a long wick like that. That's what I like to see. Look at these beautiful relative equal highs. I remember seeing these resting there this week. Look at that, all of that. and then price comes up and attacks it. Here, you see when there's multiple wicks like this, that means that it's nice to see. And because then again you can start to anticipate price trade into that level. Here, and then here, definitely here. When I say, when it's like this as well, like a consolidation, when there's relative equal lows below and high above, that's the best, because you know, okay, once it's taken out one side, so you can see we took out sell sides here. Once it's taken out sell side, then we can anticipate buy sides get taken, and you can see our price then runs higher and grabs that buy side. Here, 1, 2, 3. Here. Let's go to the 1 minute just to finish off. Even like just these highs here, these few highs can count. This is what I mean by there's not really any rules. And that's what can make it quite confusing, because you could argue, oh, then it's not really precise, but it doesn't have to be precise in this aspect. You just need to be able to train your eyes to look for these levels. Relative high, 1, 2, even here 3, I'd class that. And I believe that should be 25. So I hope that was insightful. Now let's look at significant swing highs and significant swing lows. Now significant swing highs and lows, they're going to be much easier to identify, because it's just you're looking for the most extreme highs and extreme lows, which are causing movement, which are causing swings. So let's go to the daily on gold and have a look for some. So for example, here's a significant swing low. Why? Because you can see it's created a significant swing that's then drove the market higher. So we can draw that out as a significant swing low. And like I said, being able to identify significant swing highs and lows, we'll start with the lows. It's important because price will trade to these levels. Now here's where it can get confusing for you guys. You could argue that this is a significant swing low, but you'll also notice if we drag it out, they're relative equal lows. And this is where significant swing lows become relative equal lows as well, because I would argue that these are significant swing lows as well. So relative equal lows and relative equal highs are simply just multiple significant swings, pretty much. Depends on the concept. Like here, I'd say these are relative equal lows. I wouldn't say any of these are a significant swing low. This, I'd call this a significant swing high, but we're looking at lows right now, so let's focus on that. Here, significant swing low. And I do hope this makes sense, guys. Here, what are these relative equal lows? We're just identifying them. So we need to find some significant swing lows. Here's a significant swing low. As you can see, we had a nice turn in the market. Let me move lower again. You could identify this as a significant swing low. Relative equal lows again. But again, it's also a significant swing low. So this is why significant swing lows and highs are easier to find. But when they're coupled, they're nicer, because then you know that there's going to be liquidity residing at those levels. Here's an extreme low, so it's going to be a significant swing low. Let's drop down to the 4 hour and have a look. So here, significant swing low. Here, significant swing low. When there's visible lows, here, significant swing low. Visible lows. All we're looking for is visible lows. Where is there clearly a low? Here, 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 here. Here. And we can even drop down to the 15 minute. And that's where you find even more. And again, being able to identify these is important, because when you are on the lower time frames, You need to be able to know what you're looking for in terms of targets. How many have we done? 15. Let's get another 10 done. Let's look at the 1 minute. Can we see these are relatively equal lows? They're significant though. They are still significant, but I don't want to just show you guys significant swing lows. Let's go to the week. Let's go to the monthly. Why not? Significant swing low. Significant swing low. Significant swing low. Literally, when you're doing this, all you have to do is ask yourself, does it look significant? Is it a significant swing in the market? Has it created a significant amount of movement? That's all you have to be asking yourself for you to understand whether you're identifying swing highs or lows correctly. And again, these are used as targets. How long have we been going? 21 minutes. Cool. How many more we got? Let's do another 4. Significant swing low there. Significant swing low here. Here. Here, and especially here. Let's get one more. I see one right here. So those are much easier to identify. Then again, you can say relatively equal lows, but you're starting to see now how both ideas and concepts kind of clash with one another, and hopefully you're seeing that whenever there are significant swing lows, they're getting eaten for breakfast. Like, they are getting targeted. Price is moving to these levels, and it's when you go in your charts and you do this yourself that you start to understand, okay, price is going, they are going somewhere. It's not just random. Right, let's look at significant swing highs, and we're going to use the dollar for this. And we'll start on the monthly. I know we recently had some craziness, so it'll be fun to look at monthly swing highs and lows, and then we can bring this video to a close. Significant swing high here. And what resides above significant swing highs? Buy side liquidity. But again, next video, make sure to put your post notifications on, because next video I'll be explaining exactly what liquidity is. Yeah, no need to shout. Significant swing high. Was this significant swing high? Yes. Was this significant swing high? Yes. Relative equal highs as well, you know? You know what I mean? Hopefully this is making sense. I wonder if this is going to make sense to you guys. I do. Please leave a comment if this has helped. And honestly, I answer pretty much every comment, so you're not going to go ignored. Let's drop down to a 4 hour. What are we looking for? Significant swing highs. Here, 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 here. You see, like, it's really easy, isn't it? And I'm not saying you're going to do this and suddenly you know how to trade Forex. Like, it doesn't work like that. All I'm doing is I'm training your eyes. You need to train your eyes. And it won't work if you just watch this video and then say, oh, I know what to look for. Go in the charts and look for yourself. That's how I learn, and that's how I'm learning, and that's why I have over 50 backtesting videos. Let's drop down for 1 minute, just because we've only got 7 more to do. Where do we see significant swing highs? Here. Why? Look what it caused. To be honest, in all fairness, this is probably more significant, but this is still significant because it has a short-term swing high to the left and to the right of it, so both can be used. Here, again, this is significant, short-term swing to the right and to the left. Here, these are technically what you call intermediate swing highs and swing lows. Swing lows like this are like long-term, when there's no short-term swings next to it. When a short-term swings next to these, like here or here, these are intermediate swing highs and lows. ICT does have a video on it. If you want to know, leave a comment below and I'll make sure to send you guys to that video. One more. Which one should we use? Here. It's a significant swing high. So I hope this has been useful. I understand that the reason I've done this was because the past 2 videos were quite laggy, but I've gone through 100 examples of significant swing highs, significant swing lows, relative equal highs, relative equal lows, and you can now see how both of them combine to make, you know, lows and highs in general. And what you need to understand is this is where liquidity is. That's the secret. It's where liquidity resides. Now you're probably thinking, okay, GBP baby, what is liquidity? Well, that's why you're about to turn on your post notifications and you're going to make sure to click on the next video, which is going to be showing you exactly what liquidity is. Well, explaining what it is, hopefully in an understandable manner. So thanks for watching, guys, and I'll catch you in the next one. Peace.